Hey everyone, welcome to the quick video summary by Optionables. My name is Saket, and today in this video we are going to discuss what happened to the markets, what we can expect from the markets tomorrow, and what happened to our trades, and we'll also be discussing certain trade ideas. So today the market was more or less flat from the word go, and it consolidated in a very narrow range between 16,100 to 16,300, and most of the day it ended up trading around 16,200 itself. So there was some amount of volatility in between, but comparatively compared to what we have seen over the last week, it was fairly less, because Nifty just ended up moving plus or minus 100 points and finally it settled lower. So it initially opened at 16,250, came down by 100 points, again came up by 100 points, and again came down around 200 points, and finally settled somewhere around negative 125 to 150 points. Today the lacklusters were the IT stocks. So all IT stocks were beaten down very badly, and believe it or not, stocks like Tech Mahindra and Wipro have fallen so much as 35 to 40% from their all-time high. So few months back Tech Mahindra was trading somewhere around 1800 to 1900, and today it is almost touching 1000. And on the other hand, we also have Wipro, which was well over 700 few months back, and today it has come to around 400. So we have seen a huge profit booking in these stocks, and needless to say, even stocks like Mindtree, which was around 5,000 and odd, has now come to 2,700, and many other IT stocks for that matter are performing very poorly. And on the other hand, while IT was dragging Nifty down, we had banking sector which relatively showed strength. So in banking sector, we had Kotak Mahindra Bank, which was the top gainer, which ended up moving somewhere around 1.5%. And along with that, we also had HDFC, which did provide some good strength for Bank Nifty. And that's the reason today we had Bank Nifty ending in green and Nifty ending in red, because for Nifty, we had IT stocks which heavily pulled down, whereas for Bank Nifty, it ended just around 40 points in positive, that is 0.1%, because of the private sector banks which provided good support. Now coming to the institutional data, so they have sold already around 46,000 crores this particular month, and we still have certain trading sessions left, almost around 3 to 4 trading sessions left, and easily it can cross 50,000 crores also, because today's data is not yet out, and based on how they are selling every day around 2 to 3,000 crores, easily we can cross 50,000 crores for this particular month. And when we actually look at the data, this is the highest selling they have done ever since March 2020. So if we just remove that particular month, even if you go back to somewhere say around 2010, 2009, so you won't see this kind of selling in any other month except for March 2020. And if we look at the year as a whole, they have sold almost close to 2,20,000 crores, and this is the highest ever in any year if you want to consider. So they have pulled out a lot of money from Indian markets, and when is it going to end? Nobody knows. Maybe if Indian stocks start to offer more value, they might reallocate their funds. Maybe they might remove from some other market and start putting in India. So when is it going to stop? We don't know, and we also don't know between FIIs and DIIs who are going to give up first. So whether is it the FIIs who are going to stop selling or DIIs who are going to stop buying. So whatever might be the result, we are definitely in for a big move on the upside or the downside based on how the things turn out. So now we'll be quickly moving on to the screen recording, where I'll be discussing what is the market outlook. It hasn't changed much from yesterday, but we have also initiated a new trade, and I'll be discussing more about the new trade idea, what the trade is, and how we intend to adjust it or plan to manage it if something starts to go wrong. And I'll also touch little upon the position sizing and why exactly we have chosen the quantity what we have. And coming to the trade summary, there is nothing much to discuss, because we didn't take any intraday trade and we just carried the trades which we had yesterday, and overall we ended with around 5,000 loss, which is more or less, you can say, no profit no loss situation itself. And that's the reason there's nothing much to discuss about the trade, but we'll discuss about the new trade idea. So with this, we'll be moving on to the screen recording, and meanwhile, if you're liking the content on this channel, do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining. Hey everyone, welcome to the video. We'll be quickly starting off by looking at range for Nifty. And right over here, I have opened the daily chart. And the thing is, one thing is very much clear. So we can see a very stiff resistance around 16,400. This was also a swing high, which we have seen not just on one, but in multiple occasions right over here, right? And on the lower end, we have 15,700. Again, which has acted as a very strong support for Nifty on multiple occasions. So looking at this chart, it is quite clear that we are trading in a range of 16,400 to 15,700, and we won't be witnessing any big rally until and unless these ranges are taken out. So we should either break 16,400 and close above that decisively, or we should close below 15,700 decisively, and only then, let's say this happens with some good and strong volumes, only then maybe we can conclude that a new trend has emerged. So if it is closing above 16,400, we can maybe expect, okay, market is headed upwards from here, or below 15,700, the market is headed downwards. Until and unless that happens, we can more or less expect market to trade in a very broad range. So this range is almost close to 700 points, and the market we can more or less expect to trade in this bigger range. So now coming to the open interest part. So when I open weekly OI chart for a Nifty, again we can see that they are expecting some good support in and around 16,000 and 15,800, and there is also some good resistance around 16,400 and 500. So this more or less reconfirms our range what we have in mind based on technicals. That is, people are again expecting the range of 15,700 to 16,400. So the thing is, based on the technicals or on the open interest, the expectation as of today remains to be the same. So tomorrow if the market starts moving up higher or lower, so obviously the trend can change, the expectations can change. So I will just open the chart of Bank Nifty, and we had also discussed in detail about the Bank Nifty outlook. And as of today, again, nothing has changed. We are still expecting a range of 35,000 to 33,000, a 2,000 point range, and we are expecting Bank Nifty to trade in this range itself. And if we are seeing any kind of break above 35,000 or below 33,000, then we can easily end up taking a long trade or a short trade accordingly. So we had a ratio spread which we had taken yesterday, and I would urge you to check out the yesterday's video to know what exactly is the trade. And we had discussed about three things: the entry, adjustments and exit. So today, along with the ratio spread which we had already taken, we also ended up taking a short strangle. The short strangle is nothing but a 34,000 put option and 34,700 call option. So 34,000 put option and 34,700 call option. And these are naked short strangles, and I will also give you the explanation or logic behind why exactly we have taken naked. So if you remember, last time we had made a mistake of not having the right position size, but this time we have made sure that the position sizing is right and will be able to manage even if there's a huge gap up or a gap down. So let's see what this short strangle looks like and where our break even comes, and I'll just put this on Sensibull. So you can see here I have added 34,700 calls and 34,000 puts, each 30 lots. And if market ends up trading somewhere around this range, we can end up getting somewhere around 3 lakh. But the thing is, what we have to notice, I have only gone 30 lots, which is 750 quantity, which means even if there is a gap up or gap down of say around 2% or 3%, you can see that with 3% gap down, which is almost close to 1,000 point in Bank Nifty, we'll just be losing around 1.8 lakh. And similarly, even if there's a 4% gap up, we'll be just losing around 2.7 lakh. So quite easily manageable, and looking at the situation, it doesn't look like we are going to have a 3 or 4% gap up or a gap down. So this is one advantage of having your position size under control. So if we go something like 5,000 quantity, like how we had gone last time by mistake, so then we will definitely be in trouble if there is a huge gap up or a gap down. So when you have your position size under control, there is no need to worry about huge gap up or a gap down, because your M2M will also be under control. So now we'll discuss about what exactly was the logic behind entry. Then we will also discuss about the adjustment and the exit. And now you can see that I was not really okay with doing a short straddle considering the level of volatility. So I was more or less looking for a short strangle. And the first thing I saw was on the charts. So today Bank Nifty was looking strong, and it also more or less made me believe that maybe 34,000 and 35,000 can be the range for this particular week. So I might be again wrong here. So I was expecting Bank Nifty to trade in the range of 34,000 to 34,700. So immediately I just picked these two strikes because it is quite easy to do rather than doing a short straddle. It is easy to do when you have a range in mind. And I had this particular range of 34,000 to 34,700 to 800. And that's the reason I just selected these two strikes immediately. And as you can see, Bank Nifty had consolidated here for quite some time. And since relatively Bank Nifty was looking stronger compared to Nifty, I thought maybe we can find some good support at the lower levels. So this also came with some good premiums. And as you can see, my break even now is somewhere close to 35,100 to 33,600. That means I have a fairly good range. First of all, I am not expecting Bank Nifty to cross 35,000, and my break even is coming well beyond 35,000. So I am not really concerned about the upside, because as you saw, break even was 35,100, and I am personally not expecting Bank Nifty to cross 35,000. And now coming to the lower end, so I was expecting some good support at 34,000 itself, but 33,500 is where we have our break even. And I also do believe 33,600 is where we have our break even. And I also do believe at 33,500, again, we should be finding some support. So with this idea in mind, I just entered this trade because I was quite comfortable, one with the M2M swings for the overnight gap up or a gap down, and I was also more comfortable with the range what I had because I was expecting a consolidation. So trading is more about what you expect, and accordingly you can take positions, and you can also have an idea for adjustments and exit. So now since I have told what exactly is the trade and why exactly we ended up taking this, I'm going to now discuss more upon adjustments. So what exactly are we going to do? So tomorrow is Wednesday, which means we only have one more day to look after. So after Wednesday, we have the expiry day right after. So it will be quite easy for us to manage the positions also. So when it comes to managing the positions, I'll try to keep it quite simple without trying to complicate the positions much. And the idea I have with adjustments is fairly simple. So in case if the closing happens in and around 34,000 tomorrow, then I'm going to have a 34,000 short straddle created. Very simple idea. And if the closing happens in and around 34,700 tomorrow, then I'm going to create a 34,700 short straddle. So this is a fairly or a very simple idea what I have. And what do I actually mean by in and around 34,000 or in and around 34,700? So the idea I have in mind is fairly simple. If it is closing anywhere between 33,800 to 34,100, then I will create a 34,000 short straddle. If it is closing anywhere between 34,600 to 34,900, then I will create a 34,700 short straddle, and I will have the other leg naked open. So this is a very simple idea for adjustment. And now comes the final part, exit. So this is a simple adjustment where short strangle is created into a short straddle. So what about exit? So exit criteria, what we have in mind is also again fairly simple. So the moment Bank Nifty breaks either 33,000 or 35,500, we are going to come out of the trade. So either 33,000 or 35,500. So the idea here is again simple. if any of these happen, we might have a loss of somewhere around 4 lakh. So 4 lakh will be a loss. With the adjustments, it would be much lesser than 4 lakh. And even if it goes towards 33,500, the loss would be somewhere around 3 lakh. And with adjustments, it would be much lesser than 3 lakh. So these two are the levels what we have in mind, and the moment Bank Nifty either crosses 33,000 or 35,500, we are going to exit the position. Okay, now just to summarize what we have discussed, right now we have taken a short strangle based on the idea of the range what we had in mind. So the range what we had in mind was 34,000 to 34,700, and we've picked that level as a short strangle. So after we did our short strangle, now we had to think, or we had to have a plan when to adjust. And that is also quite clear because we still have only 2 more days for expiry. So we are going to convert a short strangle into a short straddle if the closing is near to our break-even range. And finally, coming to the last part, that is the exit. If we see that the market is either crossing 33,000 on the downside or 35,500 on the upside, because these two are good point of support and resistance, then we are going to exit the whole trade. So that is for the entire trade what we have, and this is the positional trade. And as I told you, we didn't take any intraday today, and overall we ended with somewhere around 10,000 to 20,000 loss, which is more or less no profit, no loss. So with this, we also come to the end of this video, and if you have liked this, then please do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.